chat. Me and my colleague Monique, we're going to try to keep this as interactive as possible. And the reason why I wanted to arrange this chat, it's because lately, as you might have heard, there has been some changes in real estate regulations, and this has created some confusion in buyers' minds, and even the seasoned buyers. Sometimes they come to me and say, how does it now impact their buying journey? What's going to be different for them? So I think it would be great to cover some of these. But also, the market is not getting any easier neither. In Bay Area, it's still super competitive, especially in certain areas. Bay Area market is quite competitive. There are still bidding wars for homes. It's not very straightforward. I was checking the numbers. About 1 in 3 homes in Bay Area, I don't know, Monique, if you knew about it, they receive multiple offers. 1 in 3. It's a quite huge number.
It is. It is. And Rashad, all of my clients that have made offers this week, not a single one of them has been the only offer. In
Wow.
every circumstance, they've all been up against at least 2 other offers.
Wow.
So it's not just what we hear about, it's not just the statistics, it's our buyers today, what they're going through today, this week. That's exactly what's happened.
It's so true. Exactly. So that's why it's very important to understand in all this competitive environment, how are you going to make sure as a buyer that you're not overpaying for a house? And also, how do you not miss the right home? How do you get the best mortgage rate? Which product is the best for you? Monique is going to tell you more about it. And we're going to, like I said, keep this interactive. We're gonna answer your questions, and the whole idea is to give you more clarity and more confidence in today's market. Before we get started, Monique, would you like to also introduce yourself a little bit? I'm Başak, by the way. Probably. Christy Sereno. I'm a realtor at Christy Sereno. And Monique, if you want to introduce yourself, that would be great.
Yeah, I am Monique Stanford. I'm with Branch. I'm a branch manager at New American Funding. From the Bay Area, born and raised in the Bay Area, San Jose to be specific. Recently moved to Morgan Hill, and work a lot with buyers in Los Gatos, Campbell, San Jose, Morgan Hill, Gilroy, Cupertino, Los Altos, Palo Alto, just kind of all over the place. Mainly focused in California. And again, I've been doing this about 25 years. Yeah.
Yes. And I know that we worked in a couple of transactions before. I know how meticulous you are. And I'm sure all the information that you're going to provide today is going to be extremely useful and fun. And I know that you have a very fun personality too.
Oh, okay. So if you're giving me permission to be fun, that's
yes,
a good
absolutely. I love it. Absolutely.
Sounds good. Hopefully we'll take the scariness, out of buying a home and when is the right time, because as what you're doing and educating everyone, that's what makes people afraid, is just not knowing, right? So not knowing and not being informed can be paralyzing. So we're obviously here tonight to kind of relieve people of that stress and hopefully remove some of that paralyzation. And again, you guys, this is interactive, so please be sure to chime in, to chat, to let us know when you have questions.
Absolutely. Well, maybe I can get started with David is saying hi, my dear photographer and videographer. Hi, David. He's amazing. He always creates these amazing promotional videos for my homes that I'm listing. So it's nice to see him around. So, okay, I would like to get started with the question that I'm getting the most right now. It's about the new regulations. As we've said earlier, a lot has changed recently, and many buyers who have even bought homes before, they're not sure what has changed. So let's break it down in a simple way. As you know, okay, there are two sides in a transaction. There is the seller side, and then there's the buyer side. And There is a seller's agent who represents, or we call it a listing agent, who represents the seller's interest. And then there is a buyer's agent who represents the buyer's interests, and they will negotiate together. Um, Typically, what used to be in the past was automatically when the seller comes up with a sales price for a house, what they would do is that they would factor in how much compensation, in other words, how much commission is going to be paid to the seller's agent as well as the buyer's agent. And this would automatically go into the sales price of the house. However, this has created some confusions. There wasn't enough transparency around it, not in Bay Area. There has been a lawsuit, but this has started elsewhere. But then there was a trickle-down effect. So that's why with the new regulation, now here is what the situation is. The new law says it is up to the seller to decide if, as part of their price, as part of their offering, if they're going to offer compensation, in other words, if they're going to offer commission to the buyer's agent or not. Okay, so this is mainly what has changed, is mainly changing the seller's mindset, the sellers, how they're going to pay, or if they're going to pay the buyer's agent or not. But at the end of the day, buyer's agent has to be paid either by the seller or by the buyer. So it's just the only thing that has changed, actually, in Bay Area, we don't really see it affecting the way we have been working, because both sellers and buyers are very, as you know as well, Monique, very well, they're quite sophisticated. They understand that if the buyer's agent commission is not included in the sales price, then the buyer will need to come up with extra cash to be able to pay for their buyer's agent, correct? So that's why, and also it will affect the desirability of the house and affordability of the house. For that reason, usually still, as a buyer, when you see a house, when we negotiate for a house, still, typically, the buyer's agent gets factored in the sales price, and we put our offer accordingly. But this is all negotiable, you know. It's not one way forward, but it's the buyer's agent job to make sure that they get the best terms and the best price possible for you, the buyer. Sometimes people ask me, can I work with the same person? Why not I work with both the listing agent and the buyer's agent, so there are not two different commissions paid to two different sides, so I can get a discount. Do you? I'm sure when you keep coming to situations like this as well. But what happens is that, like I said earlier, the listing agent is, their main interest is protecting the seller. They want to make sure that they can sell that house for the highest possible price. But you, as the buyer, do you really want to pay that highest possible price, or do you want someone objective who will also evaluate everything about the house in an objective way and tell you what the competitive landscape is like, how many offers are there, and what is the most important thing for the seller, and be your own advocate? So that's why you might think, oh, I'll have one agent and work with both of them work with one of them for the transaction. And with this, I'm going to save, let's say, 5K in commissions. You might think that way, but how are you going to make sure that you're not overpaying maybe 50K or 100K for the house? As we've said earlier, it's bidding wars are still here in Bay Area. One out of three homes, they get sold with multiple offers. So you need to have your own advocate, your own buyer's agent together with you. That should be absolutely your starting point. But before that, you should make sure, especially if you're going to get loan, you have to get your pre-approval. So that's why I wanna chime in now to Monique, and I wanna ask her, tell us a little bit, Monique, what do people need to know when it comes to pre-approvals? Actually, before that, should
You
they
know,
wait?
before that, actually, okay,
Should they
so
wait for the mortgage rates to drop? That's a bigger question.
well, okay, so we'll talk about mortgage rates because I know that that's something that's a
Okay.
big hot topic and should we wait and what should we do? But just to reiterate and talk about what you're talking about, the
Sure.
regulation, right?
Uh-huh.
And what I'm seeing when I'm representing buyers and how many offers that I'm seeing and the contracts that I see that come across my desk, right?
Mm-hmm.
Um, I am seeing that generally speaking, the buyers are still asking that the sellers cover the buyers' commissions. I am seeing more and more buyers being represented by their own agent. I am seeing more and more
Mm-hmm.
sellers agents refusing to what we call double end, where as you were talking about having
True.
one
Uh-huh.
agent, right? So I'm seeing more and more of them saying to our buyers, I won't represent you.
Good agents,
Um,
actually, they would do so. Exactly.
yes, so
Good
I
agents
am
do not
seeing
represent both sides. It's a
I
conflict
am
of
seeing that.
interest. Mm-hmm.
So although we've had this big change in regulations, I
Mm-hmm.
think the biggest thing is the transparency that,
Yes.
that the seller's agent realizes they actually have a choice. They don't necessarily have to pay for the commissions of the buyer, right?
Mm-hmm.
Um, but again, we have very smart sellers here, and we're seeing that in order for them to get the highest and best for the house that they are selling,
Mm-hmm.
they're participating. They're playing in the
Yes.
sandbox. They're
Yes.
saying, okay, I will pay, but it's always built into the price. And guess what? That's not changed because it's always been built in the price,
Yes.
right?
Exactly.
So
Mm-hmm.
really, so that was the only thing I just wanted to say, like what I've been seeing, the contracts that I've been closing, and I've not had one single buyer pay for their own commission in a while. Every once in a while, I do get some
Me
buyers.
neither. I haven't
Yeah,
seen. Mm-hmm.
every once in a while, you'll get a buyer that has that extra cash and they want to reduce their purchase price in hopes to pay less taxes. And hey, if that's the case and you're able to do that, go for it. But most people want to finance it, right?
Yes,
Um,
absolutely. Uh-huh.
so rates. So actually, we have a question. You want to take a look at the question?
Sure. Can you see that as well? Yes.
My
New
question
Federal
and answer.
Reserve Chair nominated. Yes, Mark Tank today. The market. How do we see this as potential impact to the housing market in the coming months and years? What do you think, Monique? You're more
Well,
in
I
tune
think that
with the
so.
rates.
Yeah. Well, the rates are motivated by our economy.
Mm-hmm.
Okay. When there's a strong economy, then generally speaking, we won't see a huge cut in rates. When the economy starts to soften, we start seeing
Correct.
rate cuts, right? And so today we had the job opening and the job opening and labor statistics report that came out today.
Mm-hmm.
And it definitely showed weakness in our economy. It definitely showed less job openings significantly. As a matter of fact, they even lowered the last report that came out. And what did that do to rates? We saw today about a 35 basis points improvement in interest rates today. So sometimes people think when we talk about improvements of what we say 35 basis points, that's the cost of the rate. It doesn't mean that that particular rate went down. To
Mm-hmm.
make it simple, a 6% interest rate didn't go down by 0.35%. That's not how it works, right?
Correct.
So in our basis points world, 100 basis points is typically a quarter improvement in interest rates. So we probably saw about an eighth improvement today in interest rates. Okay.
Mm-hmm. Mm-hmm.
I don't see rates moving quickly. I think they're very stubborn. I think they're going to continue to be stubborn.
Mm-hmm.
I don't think we're going to have rates closer to 5% probably for another year and a half to maybe 2 years.
Mm-hmm.
Again, I'm just one person. right? But I think a lot of our buyers that are newer to the Bay Area, if they've only been looking at rates over the last 5 to 10 years, rates in the last 5 to 10 years have been substantially low. But those rates were artificially deflated. I mean, it's not normal. If you look statistically speaking over the last 50 years,
absolutely.
the average rate is 7%.
Yes, 6, 7%, correct.
But I think it's taken our buyers today over the last 10 years to get rid of that idea that rates are going to be back in at 3% at some point. And so we've seen a lot of people think to themselves, well, I'm going to wait. Well, I'm going to wait, right? So as you know, 3 years ago, rates were close to that very high sevens, right?
Correct.
And so now we're seeing rates in the high fives, 5.99. That's 3%. That's a huge, big difference, right?
Correct.
So when people think about, well, should I wait? Okay, well, let's look at what happens if you wait. If you're waiting to buy, right? If you're waiting to refinance. And let's just say people think to themselves, well, I'm going to wait for rates to get to 5% because I think that's going to be a good time to buy. Okay. So I talked to Bashak about it for those of you who are watching. I talked to Bashak about, well, let's use an example of a buyer that's looking to buy, call it a $2 million home. Okay. And let's just say they're going to buy 2 million in, I used Los Gatos as my example just to look at the growth.
Sure.
Okay? And so for 2 million in Los Gatos, can you see my board?
I can see your board. I think Zoom can also see it. Perfect. Yes. Perfect.
That's today, right? So we're seeing economic projections for the Los Gatos area. There's two figures I look at: historical,
right,
and projected. Right? Historical has been about 6.5%. Year over year. Projections are closer to about 5.87, 5.85 year over year. Okay. So in 2 years, a $2 million house will be worth about 200 and what did I put here? 242,000, I believe it was. And hold on, I'll give you exactly what it is. It will be worth let's see, 2,240,000, 2,240,000 in 2 years. That's year over year projection of about 5.83%. Okay. So in 2 years in equity, you will have made $240,000, right? Fast forward 2 years.
Absolutely.
But if you wait 2 years to buy, and let's just say in 2 years, the rate is 5%. Okay, in 2 years. So you've waited and you get to buy at a lower interest rate. Goody goody, right? You think to yourself, well, my payments are going to be less.
Yeah, you think you're gaining on one side, but you're losing big time on the other side.
What's funny is that if you wait, instead of a down payment being 400,000, your down payment would be 448,000. So your down payment today is 400, but based on the projections, the down payment in 2 years is going to be 400 and was that 448,000. Okay, so that's almost $50,000 that your down payment is going to be increased. Because now that home that was 2 million is now $2,240,000. Right?
By the way, there is also another chance that maybe it's more than 2 million and 240, because when rates drop, so many people come on the market that it also inflates the prices.
Oh, yeah.
More than
Now
the average.
multiple offers. Now people are paying. This is conservative.
Exactly. That's a very conservative one. But if the
Right.
rates are lower, the prices are up because there's much more demand. Historically,
Right.
we've always seen this.
Because what you'd be looking at is you're looking at your mortgage payment, and your people think, well, I'm going to have a lower payment because I'm going to wait. But today's payment would be $9,583. Okay. So let's just say today that payment is 9,200. And what did I say? 9,200 and let's see, 9,005, 9,005. 2005, 50, 58, 9,000. Hold on. I got 9,583. 583. Okay, that's today. 2 years from now, that payment is going to be, instead of that 95, it's going to be 9621. 9621. So this is because the reason why the payment is higher, although the rate is almost 1% better, right?
Yep.
But your payment is higher because your loan amount is now increased significantly.
Absolutely.
So your loan amount has increased, your down payment has increased. You missed out on $240,000
in equity.
worth of equity. So really the cost of savings, when you take into consideration the cost to refinance of $7,000, your total, what we'd be looking at is about $240,000 that you've missed out on after all is said and done. So when people think about waiting for rates to improve, it's not saving them money, it's costing them money.
Exactly.
You want to take a look at what we have. I agree. I think people will also be moving their dollars to less volatile assets. Yes, because
absolutely,
real estate in the Bay Area, right, Masha? Real estate in the Bay Area. I've been here, as I said, all my life. That's many years. That's over 60 years. And so, I'm one of those where, yes, my mom bought a house for $24,000, right? So, but that being said, people that buy in the Bay Area, if you guys look at any stats, every 10 years, our values double.
Yes, absolutely.
Every 10 years, our values double in the Bay Area. What other investment out there can you say, statistically speaking, over the last 50 years, every 10 years, the values double?
Absolutely.
So, people always ask me, Bashak, when's the best time to buy?
25 years ago. It was 25 years ago.
Right?
Or
today.
As soon as possible. Exactly.
As soon as possible. Absolutely. Right. And then there's also a question about there's the good time to refinance, right?
Yes,
that is definitely
homeowners.
Yeah, that is definitely a great question. I think who was that? I can't scroll because you're much more tech savvy than I am, but
that's Omar.
That's a great question. It's really going to be situation by situation because it really depends on what your current interest rate is, what your current loan amount is. You really don't want to refinance unless you're going to save typically at least about usually 0.625 to 1%. If you're going to save 1%, it's a no-brainer because you'll immediately start saving today. And you can always refinance again in 2 years, because what you want to do is you want to figure out what's the difference in interest, how long does it take to recoup the cost to refinance, am I getting a 0-point loan, am I paying points? If you pay points, you're probably not going to refinance for another 5 to 7 years. If you do 0 points, you'll probably refinance in 2 years. So everyone's situation is different, but I definitely think that if your current interest rate is in the probably I would say the mid to high 6s or higher, you should absolutely think about refinancing.
And this is exactly how we should be thinking if you haven't purchased a home yet, or if you want to buy, I don't know, maybe you want to move up, maybe you want to upgrade, but you're thinking of, shall we wait for the rates to drop? This is how it goes. I mean, at the end of the day, you're going to refinance. The most important thing is to get in now. And then as rates drop, you will have a chance, just like the homeowner, you will have a chance to refinance. So
Right.
that's the beauty of it. Your mortgage payments can easily be lowered the moment you have a refinancing opportunity.
We
And
call
this,
it date the rate
they
during
do.
the home.
Yes,
That's in our
exactly. I was
industry,
going to
that's
say
what we
that
call it.
too.
You date the rate. They're only
Yes.
around for a little while and then kick them to the curb and then you go to the next best rate. So,
Yes, do not lose the opportunity of accumulating that equity
well,
because
and the
when
thing is,
Mhm.
Bashak, if you think about it, unless you're one of our tech savvy people that are making what we call RSU, income restricted stock income,
Mhm. Which we
living
have
in
a
the Bay
lot in Bay Area, yes,
paying the kind of rent that they pay,
Mm-hmm.
how easy is it to save up $250,000 in 2 years? How easy is it? If you're paying $7,000, $6,000 a month in rent, right? The
You
cost
pay,
of living around here,
yeah.
how are you going to save that money every month, putting away $1,000 and how are you doing it? Most people that, at least if they're not receiving like restricted stock units where they're getting this, I call it funny money, most people can't just save in 2 years $250,000,
Mm-hmm.
right? Because the cost of living is so expensive. But that's how the rich get richer. They buy real estate.
Yeah, absolutely. And also, one another thing we should remember is that if you are still paying rent, you are technically paying somebody else's mortgage because what you pay as rent, if you haven't bought before, is just an expense. It just goes away. It just disappears. It doesn't accumulate anywhere. It's just a simple expense. But like Monique showed, the moment you get into a house, especially in Bay Area, it is such a unique area. Like you said, on average, homes appreciate around 10%. Within 10 years, it would have doubled. So the earlier you get in, the earlier you start accumulating. And also, there's no such feeling that it's such an amazing feeling to have your own place, that achievement feeling and that security feeling as well. Also, from an emotional point of view, it's very big as well. So, thanks for explaining that, Monique. That was really, really powerful. I love it.
Voice was echoing, so hopefully the echoing has gone away.
Where did he say? Is it on Zoom?
The Facebook. So I think it was might have been because I had the other microphone on. So you guys can hear me though, right? And there's no more echoing. Hopefully it's okay.
I hope
go
so. Okay, that's great. Well, another thing that another question that I often get asked when it comes to Bay Area's unique situation, the fact that there's bidding, there are usually multiple offers that we see. So buyers, they get intimidated before they start the journey or after they've started the journey. Their very first question, one of their very first questions is, how do we make sure that we don't overpay? What's the limit? What do I do? How am I going to decide how much I'm going to put an offer for? So, first of all, um, we have to decide case by case. You really need to be working. That's why I said you really need to be working with a very good buyer's agent. Uh, Obviously, with honesty and integrity, that's number one, but at the same time, who's very good with data and statistics. Once you see a house, you like it, and you feel like, okay, this is it, I want to put an offer, then your agent should be presenting you what we call a comparables analysis. This is what appraisers also use as well, right, Monique, when they are going and evaluating the value of the house for mortgage purposes. We actually pretty much use the same system. We have access to properties, similar properties with similar characteristics, similar features that have been sold within the same 1 mile radius, let's say, within the same area. And We look into how much, yeah, I saw the question as well. Are you overpaying if it's your dream home? Well, I'll come to that. No, in a way, no, in a way, yes. So what your agent will do is that she or he is going to look at all the comparables, and they're going to identify what was the average listing price and what was the average sales price. So there you can see what the demand is like. There you can see on average how much buyers went over the asking price for that particular area. And also, that will be good if your buyer's agent, if there are any other pending properties within the area, your buyer's agent can give a call to those agents. It's all about the networking. Then you need to get the clues and hints about what the other homes are sold for, even if it's not officially announced yet. So your buyer's agent should be gathering all this information for you so that you can have a calculated guess about how much that home can possibly sell for. However, again, the data and statistics, they're not going to determine 100% the outcome, because just like Hans said, that's why I love that question. Buying a home is a very emotional process. Sometimes we look at the data, let's say again, a $2 million home. We look at the data and statistics and we will say, it can go anywhere between 2.1, 2.2 max. But then all of a sudden you prepare your offer accordingly, maybe not. But all of a sudden you see an offer coming in with 2.5%. I had this experience lately. One of my buyers, they significantly wanted to go offer higher because their in-laws, they live on the same street. What an amazing luxury to have for them to have their, grandparents living almost next door. So for them, it was an incredible opportunity, and they were ready to pay anything and everything to get that house, and they got it. So there are a lot of individual motivations that people can decide this is the right house and I'm going to go fully in. Or sometimes people keep putting offers on different homes and they keep getting outbid through twice, three times, four times. And then finally, again, it's a very emotional reaction. And then finally they say, you know what? I can't take this anymore. The school is about to start. We have to get into the school district right away. So I'm ready to give whatever it takes. So sometimes that's why I call them black swans. All of a sudden, out of nowhere they come. Yeah, go.
To think about what you're talking about, Basha.
Sure, Monique.
Again, is I have realtors like you, multiple realtors that I work with, and they often they have a dollar amount that they think it's going to go for. And they know this based on how many offers, statistically speaking, based on how many offers, each offer might be X amount over the list price, and they'll make a recommendation. So I'm sure you do this, Basha.
Of course.
You figure it out and you say, here's what I'm recommending that's going to help you at least get in the game, possibly get your offer accepted. But if anything less than this, I don't think they're gonna consider us. I don't think we're gonna get a counter, right? And how often is it that you make a recommendation, but they don't listen?
It happens a lot of times. That's why twice or three times buyers may get outbid, usually first time home buyers, because it takes time for them to understand the market and the dynamics. I can't blame them.
Here's what you can't say that. Here's what blows my mind. If the amount of money that my realtor is making, or whether it be my attorney, let's call him my attorney. My attorney's giving me advice, right? He's representing me. And I'm paying him to represent me. And he gives me advice, and I say, you know what? My buddy at work told me I should do this. Or my mom and dad bought two houses.
And they got a discount.
Yeah. whatever it is, right? And suddenly the professionals are their friends or their coworkers, but really the professional's you. So it always blows my mind when I have realtors the buyers that don't listen to their realtors. And then when that house that they missed at 2 million and it sold for 2.2, now guess what? That has set the new precedence. That is now.
That's a new comp. Yeah.
That's a new. So that is closed. So now that house that you could have paid 2.2 for, now that's the new comp. Now you're looking
for that neighborhood. Yeah.
For that neighborhood. You think that house that just sold for 2.2 is now closed comp is going to sell for 2.2 again? Remember, the values we're seeing, at least in Los Gatos and the different areas, anywhere between 4 to 6%. Well, guess what? You end up costing yourself money. So, as a loan officer, I'm telling you, listen to your realtors. Let them earn their commissions because if you don't listen, you're not even letting them do their jobs, right? So you don't necessarily have to make bid after bid after bid. You just have to listen to the advice of the individual that you hired to represent you. I think that's just so important.
Yes, I think, like I said, usually when it comes to first buyers, I think it's harder for them because it takes time. It takes a little bit of practice to understand the dynamics and
expensive lessons.
yes, because there's always a cost of waiting. And what happens is that what I always tell to my buyers is if you really like the house, if you're going to put an offer, put your best offer in. Because if you don't get this house, because you love this house so much, that it will always stay in your mind as a benchmark for the next homes we're looking at. You will say, oh, but the other house we missed had a better backyard. Oh, the other house we saw had, I don't know, it was on a better street. Oh, the other house was more spacious. You know, you will always keep comparing it with that house that you missed, and this happens. So it's very important um, to to look at the data and statistics together with your buyer's agent and really let the data guide you. But at the same time, do not forget that buying a home is a very emotional decision, and always another buyer can all of a sudden can jump in and put a higher offer just because of a unique personal motivation about that house or about that neighborhood. So that's why your buyer's agent is very important whom you're working with. That agent should be getting all the clues about the offer situation from the listing agent side and strategize with you accordingly. Because you never know. Are there 3 offers? Are there 5 offers? Are there 2 offers? Are they all cash? Are they offering anything different? What is the most important thing for the seller? Is there anything else that you could offer to make your deal more attractive? Because at the end of the day, there are 30 terms and conditions in a purchase contract. So it's not just about the price we're talking about here. You can do so many other things in your purchase agreement to make your offer more competitive. And it's your buyer's agent who's going to guide you through. So it depends on which house you're putting an offer, who the listing agent is, whom you work really matters. So make sure that you really understand the competitive landscape. And if you want the house, make sure that you have a nice competitive offer. So yeah, like I said, the way you're going to make sure that you don't overpay is that you are going to base it on data and statistics. And also, people ask me, Monique, a lot, when this happens, what if I want to offer higher, but I don't have the necessary, but I'm not pre-approved for that rate yet. So how quickly they can do it. So when should they and how should they be pre-approved? Because in today's world, just I want to underline this, you cannot make any offer on a house if you don't have a pre-approval from a lender. Well, many agents will not, buyer agents will not even accept working with you yet until you have a pre-approval. Monique would tell you how important it is, but just for me as an agent, I really, in order for me to serve my buyers in the best way possible, I really need to know their financial criteria. I really need to know what their eligibility is about, because that's going to have a huge impact on the pool of homes that we're looking into. Which neighborhoods we can focus, how many bedrooms we can focus, what can we do with this amount of eligibility. You don't have to spend it all. It doesn't mean that you're pre-approved for 2 million. It doesn't mean you're going to buy a house for 2 million, but we need to know the upper limit and strategize accordingly. So when it comes to pre-approval, Monique, you want to tell us a little bit? What's the starting point? How do you do that? What do we keep in mind?
Sure. So first of all, pre-approval, Kim, do you want me to go into like the difference between like pre-approval and underwriting as well, or just?
I think that would be a good idea as well, because we're talking about, we're giving tips to our buyers today about how to be more competitive in Bay Area's real estate market, and that's a very good point.
So the first thing is, I strongly recommend anyone who is going to like an online platform to understand that if you get an automated pre-approval, that's going to be AI generated. It's going to be based on what you input in the application, right?
What do you mean automated? What are we talking about here? If they come to you, to a mortgage broker, or are you talking about online tools?
Go to big companies, even like Rocket Mortgage.
Oh, okay.
Big companies that have online. So be very mindful, because when you get an online pre-approval, it's based on the conversation or based on the information that you type into the application. So one, you want a true pre-approval where we have verified your information. So when I have a conversation with somebody, I am basically running numbers, and we're kind of pre-qualifying them.
Right.
Being pre-qualified is based on a conversation, right? So that next step is, well, let's go ahead and go through the pre-approval process. And the pre-approval process is like a pre-underwriting process. So that means now we're validating all the information that we've just talked about. So if I have a client that says they get a base of X, call it 200,000, and they get a bonus, call it 30,000 a year, and then they also receive restricted stock units, RSU income, and let's say it's another 100,000. So what I have to do is I have to verify, has he been receiving or she been receiving that bonus for 2 years?
Right.
At that company. Has he or she been receiving RSU income for the first 2 years at that company? And I request vesting schedules, and sometimes a copy of the contract. And what we're doing is we're pre-underwriting. So my team will validate all the information that they've provided. And then we will issue a pre-approval. We immediately submit your file into underwriting.
Does my credit score get impacted?
That's a great question. And so
I get this question a lot.
I know. So we do, and a lot of lenders will issue pre-approvals, and even we can anyways underwrite the files with our underwriters with a soft inquiry.
What does it mean, soft inquiry?
Inquiry has no impact on your credit score.
Perfect.
Okay. People are very, very protective of their credit scores, but what's really funny is they think it's because they had a hard inquiry that their credit came down 20 points. Okay. So be mindful when you're monitoring your credit scores. Most people get it from their bank. They get it from Credit Karma. They get it from their credit card.
Right.
And they say, here's your TransUnion credit score. Here's your Experian credit score. Those credit scores are based on the use of credit cards.
Right.
When you pull your credit, a hard inquiry, for the purpose of applying for a credit card, applying for a car loan, or applying for a mortgage, you're going to get 3 completely different middle credit scores. All right? Because the algorithms that are utilized to generate those credit scores are completely different depending on what kind of inquiry it is. So, Barsha, you applied for a loan, or Hans, let's say Hans, you applied for a loan for your dream house, okay? And you tell me, oh, my credit score is 810. Okay, Hans, how do you know it's 810? Well, because my bank sent me this notice and said my current credit score is 810. But that credit score is based on credit card usage. So when you apply for a home mortgage and we do a tri-merge credit report or soft inquiry, I guarantee you, I would say 99 times out of 100, the scores that we pull are going to be 10, 20 points lower than what you think your score is. But people thought that what they end up saying is, oh, wait a minute, it was the inquiry. My score was 810, and then you pull my credit. You tell me my score is 730 or 780. Well, no, your score was never 810 for the purpose of a mortgage. So the inquiries are usually only a few points, maybe 4 to 6 points. But know that your starting point is not what you see on Credit Karma. Your starting point is not what you see when you get it from your bank and it tells you what your experience score is. People generally don't know, but they know that they have excellent credit, right? So just be careful about that. Whatever lender, I would ask them if you can do the pre-approval and go through the process with a soft inquiry. But hopefully that answers your question about the credit score. Also, if you do a hard inquiry and you are shopping rates, have them do that hard inquiry within a small window of 30 days. Because when you shop rates and you have your credit pooled for the same purpose, it's one and the same inquiry. Yes. So it will not have, your scores won't keep coming down every time you pull your score, because it's done in a small window, and within the 30 days, it's considered one and the same inquiry. Does that make sense? Yes, absolutely. So when you get pre-approved, if your lender's not asking you for year-end pay stubs, RSU schedules, if they're not really truly pre-underwriting your file. And you want to work with someone, because what you don't want is you don't want to get pre-approved for a beautiful dream home. And then they didn't verify everything. And now you're in contract. And now you got to put $200,000 down more than you thought, or you just don't qualify. Yep. Right? And it happens. We've all seen these cases happening, unfortunately. Well, and it's not a but yes, I've been cleaning the messes up. Yeah, you've cleaned messes for me. Because I do not want to. I won't issue a pre-approval unless I verified everything. And so sometimes people will get upset. Oh, well, Monique, my other lender, they didn't ask for that. And I'll say, well, that's okay. It's better to be on the safe side. Yes. Do you want to also talk about the difference between being pre-approved versus being fully underwritten? Because these are two different things. And if you are a fully underwritten buyer, and if you put an offer showing not just your pre-approval, but your fully underwriting, then this is going to make you much more competitive. You're going to be almost perceived as a cash buyer, right? Box on the contract that specifically asks, yes, if your buyer has an underwritten loan. Yes, exactly. Right. There are 3 boxes you can check on a purchase agreement. The buyer is either pre-qualified, but in most circumstances, your offer is not even going to be accepted if you're just pre-qualified. But there's a box to check. But in Bay Area, it doesn't mean anything.
The other box is you're pre-approved. The third box is fully underwritten. And if you're fully underwritten, you're going to have a competitive edge. This is one of the biggest tips you're going to get today. Do you want to talk about it, Monique? Because it makes such a big change.
So for us, we pre-approval. So our team will verify everything, get it all ready for the underwriter. We issue the pre-approval typically within 2 business days upon receipt of all the documents that we need to issue the pre-approval, right? So once we do that, then we send it into underwriting. Now, we have designated underwriters, and the underwriter's job is to validate all the information that we put in there. So the underwriter is going to match the file and that the criteria of that file with the underwriter's guidelines for that program. Okay, so if you're looking at one program and the maximum, what we call debt to income ratio, which is just basically total monthly debt divided by your income, if that needs to be 43%, the underwriter is going to check that box and say, yes, I have validated. How does she validate it? She's validated by validating the RSU schedule, by validating proof of receipt, by validating the proof of continuance, so she's checking out all those boxes for the investor. She's checking, do they meet the minimum FICO requirement for that program? She's double checking that. Yes, they have. Do they meet the reserve requirement? Because many times when you get loans, there's a reserve requirement. Reserve requirement means if your monthly payment is $10,000 a month, and the lender requires 12 months reserves, then after you close and you pay for your home, you need to have $120,000 worth of available assets. So an underwriter is checking all those boxes and validating everything.
Right.
So a good loan officer has done all that already.
Yes.
So that when I send my files to our underwriter, it immediately comes back as underwritten approved. It's been underwritten. I don't get these pushbacks of, oh, I need this, oh, I need that, because I have gotten it or my team has gotten it up front. Okay, so the difference is, and also once you do that, you typically can close faster.
Yes, it's true.
Fully underwritten loan, so it gives you that other competitive edge. So it's not just that, oh, I'm fully qualified, but because I'm fully qualified, I can close in 2 weeks. So it allows you to not just compete against other borrowers that have loans, but now you're competing with borrowers that maybe are paying all cash.
Yes, absolutely. So you are almost perceived, let's say, you can be perceived as almost as a cash buyer when you're fully underwritten, because that gives the signal to the seller side that this loan is going to go through. There is not going to be any issues. I'll tell you what, around in California, 14 to 50, roughly 15% of transactions, they do not go through. For some reason, the transaction fails, and it's a big rate, so it's a big number. That's why sellers, this is a seller's nightmare. They want to make sure that the moment they're in contract, that house, that escrow is going to close safely and securely, because you can't go pending and then 15, 20 days or maybe 30, 45 days later, the transaction fails and you have to put that house back on the market. Is a disaster scenario, because the house is going to lose its value, its perceived value. People now will doubt, oh my God, what happened? Why is this house back on the market? Is there a problem with this house? And the seller has wasted so much time, waited for you to close, and it didn't happen. So it's a seller's nightmare. That's why whenever a seller has multiple offers in their hand, they want to make sure that they not only they go with, of course, the best offer, the highest price, but sometimes we see they might not necessarily pick the highest number, but they might go for one lower offer, but which is a safer bet because you're fully underwritten, or you can close earlier, or maybe you have put more down payment And it again signals to the seller that you're in good shape and this transaction is going to go through without any problems. That's one main thing. If I think like a seller, when I'm on the seller side, this is what we look at. We want to make sure we don't accept just the best offer, but the safest one. That's why your lender is equally very important. When you're putting an offer, seller side, they will look at who is your lender. Do we know them? Are they well known in the industry? Because we kind of know each other. Some people, they have good reputation, some don't. And they will look at that. They will look at who is your buyer's agent. Are they well experienced? Will they be able to, complete this transaction without any headaches? There are so many factors that the seller side will consider when they're looking at your offer. And if you want to have this competitive edge, it's not just about, oh, I have to overbid, but you need to be really very well prepared financially. Contingencies are another thing. I don't want to get into too much of the technicalities, but are you putting an offer which is financially with a finance contingency or appraisal contingency? They will see how confident your offer is and how fast you can close. And your agent is going to guide you through all these details while they're putting your offer together. That is exactly the reason why you should not be working with the listing agent. You should work with a buyer's agent to make sure that you can strategize all these items together. I think we've covered a lot of important things. Monique, do you want to add anything when it comes to pre-approvals? Or maybe you want to talk a little bit about loans? That's a good idea. Yes, because people ask me, what's the best rate? How do I get the best rate? Who do I work with? Do I work with my bank? Do I work with a broker? How would you answer these questions?
So I usually will advise people to, depending on their scenario. So everyone has a different scenario. If you've been at your job, in the same job, okay, working with the same company, making the same kind of income, right? So I'm just gonna, again, it's a lot of my RSU clients, right? That they've been working the same job.
Sure.
And they have a significant amount of assets at their bank, right? Typically speaking, not always, but most of the time, you'll get the best rate when you go to the bank that keeps the majority of your funds.
Which we call relationship banking.
Pricing.
Yes, relationship pricing. Yes.
So get relationship pricing. Now, sometimes, and again, that can look something like for every 250,000, you might get an eighth better off your rate. Meaning you move, or sometimes they ask you to move money, things like that. That's relationship pricing. Okay?
Right.
The good thing is that might get you the lowest interest rate. Now, it might not qualify you for the highest purchase price. Because generally speaking, the banks are going to be very conservative when they are looking at your debt to income ratio, right? Where banks usually want to see 43%. Whereas you go to a correspondent lender or a broker, they can usually go up to 50, sometimes 55%, sometimes higher, which means you can qualify for more. And so when it comes to getting the best rate, it really, what I always tell people is get two opinions.
Absolutely. I always say that too. Get at least two quotes. Yeah.
Go to your bank, get their rate. They might end up telling you something like, if you're self-employed, let's just say you are working full-time at Meta and your wife is self-employed. She's a consultant. And she takes in a lot of monthly income. But when she does her taxes, she can write off a lot of her interest on her mortgage. She can write off the trips from here to there. She can take all these deductions. So although she might be, or he might be bringing in about $200,000 a year in receipts, once she does her taxes, she's writing off half of that, or he's writing off half of that. right? So, but what if you need more income to qualify? What if your bank or whoever you're speaking to is unable to qualify you for the purchase price that you want to qualify for?
Right.
That's when you really want to work with someone who knows how to think outside the box. Usually a broker or correspondent lender, not all of us are well versed in those types of loans, but they're entrepreneur loans, right? So we have tons of entrepreneurs out here in the Bay Area, tons. People that are, again, consultants, people who started their own company. I have a lot of clients that start tech companies and they sell them off. Then they go and they start another tech company and then they sell it off, right? How do you show that income? I mean, how do you, you know, if you're an entrepreneur, you want to speak with someone who can think outside the box and get you pre-approved for what you really truly can afford, not what your tax returns might show as your income, right? So think about relationship pricing with your bank. Think about entrepreneur type loans if you're self-employed, or you're contractor 1099, you have Schedule C, or you have your own. You might have your own LLC, you might have your own corporation. I strongly recommend you to work with a mortgage broker or correspondent lender when you are self-employed, because I feel like we have a lot more options for you.
Yes.
There are a lot of attorneys that might have been working as a W-2 attorney, and then they turn partner. So they go from being W-2 to being self-employed. And banks will tell you need a 2-year history to be self-employed. You're like, oh, but I work for the same company and I haven't changed my job. But no, you went from W-2 to self-employed. So, though, again, you just really need to get a second opinion. Know that there's 40-year mortgages out there. There's interest-only mortgages out there. There's what we call DSCR loans, where you're trying to buy an investment property and we don't even look at your income. We just look at the income that the property generates. So there's a lot of different programs out there.
Yes.
Now, in talking to your lender and figuring out what your ultimate goal is is it getting qualified for the maximum purchase price? Is it getting qualified for the lowest interest rate? Is it getting qualified for putting maybe only 10% down? Right? Maybe only 5% down, maybe only 3% down.
That's a good point. I wanted to ask you, because this is a question that I get asked a lot. I think there's a misconception that people think, oh, I need to put at least 20% down. If not, I can't get mortgage. Can you tell us about that?
Yeah, you can get a mortgage, and it really depends on the purchase price. But I'll tell you, you can go up to easily about close to 3 million with only 10% down. But again, people get used to working with their banks, and their banks will tell them they need.
Yes.
And so then the buyers think, oh, I have no option.
Yes.
I need to save more money.
But I have seen buyers buy with 5% down payment, 10% down payment. Again, this depends on the purchase price, but I'm still talking about Bay Area. There are so many. We work with buyers with all purchase prices. So it's all possible, and we see much more flexibility, like you said, with the mortgage brokers rather than the banks. Banks are very good when you fit into the conventional picture, you know. Like you said.
A lot of things. A lot of people also want to put more than, or at least 20% down, because they want to avoid mortgage insurance.
Yes.
And so their mindset is, oh, I don't want to pay mortgage insurance. So when you guys are looking through Redfin or Zillow, and you are looking at the cost of mortgage insurance, that's typically based on an FHA loan. Mortgage insurance for an FHA loan can be very expensive. But
can you tell us what FHA loan is as well? Just for people who are not familiar with it, can you tell us what's an FHA loan and what's not?
By the government. And so that insurance there's a cost to that, and you pay a monthly insurance premium. That's called private mortgage insurance. And with FHA, you also pay an upfront mortgage insurance and premium, and that gets added to the loan amount. So you have mortgage insurance, you have private mortgage insurance. And so what it does is it increases your payment because you're paying mortgage insurance. People don't like it because in many cases it's not tax deductible, where your interest up to $750 is. And so people want to avoid it. Here's what's really funny. In most cases, mortgage insurance is less than $100 a month.
Right.
Okay. And so that's $1,200 a year, $2,400 in 2 years. In 2 years, you could get an updated appraisal and get rid of your mortgage insurance. So you might be paying an extra $100 a month, but you have left that extra $100,000 in your stock account. So now, instead of paying 30% taxes on that $100,000 that you just withdrew to use a down payment because you're trying to avoid $100 a month, right? So let me say that again. You're taking out $100,000 from your stock account. You're going to pay your taxes on that, 30%, call it. That's $30,000 to save $1,200 a year. So really think about how much money you want to put down. And if you're really trying to save money, maybe putting less down is a better option.
Yeah, it's not a one size fits all. I think everybody's goal is different. Everybody's finances are different. The way you're making money is different. Your savings are going to be different. So we, like we said earlier, it's always, from what I understand our conversation, just to summarize for people who have just joined us as well, is you make sure that when you want to get a pre-approval, when you're looking for a lender, make sure you get 2 different quotes, from one from your bank maybe, but one definitely from a broker, because usually they have more products available, they're more flexible, they have less rigid structure, let's put it that way. Maybe it will suit you better, but maybe because of the relationship pricing, etc., your bank might be getting you a better rate. So it's not a one size fits all. You need to do a little bit of homework and make sure that before you start your home hunting journey, you have a clear picture of how you want to structure your financing, because otherwise there are surprises. You go, you see a house, you get excited, you want to put an offer in, and you're not fully aware of.
Call your lender on a Saturday evening at 6:00. A lot of bankers, they don't pick up.
It's true, yeah.
There's a lot of loan officers, and for me and a lot of my coworkers,
true,
we work when our realtors work. And so,
just 24 hours a day, almost 7 days a week.
Call at 7:00. I know it's urgent.
Of course, of course.
Okay, maybe offers are due sooner than later. What do we need? Again, we're trying to release that stress, right, from the home buyer and make the process smoother.
Because everything happens so quick once the way, if there are any potential first-time home buyers, which I can recognize a few names, I know them, and there are a few first-time home buyers in listening to our chat today. So the day, there's always a due date for offers. We see a house, usually you see the house on a weekend. That's why I always say, let's see the house on a weekday so we have more time to think it over. But people are busy. I can't blame them. So we usually see it on a weekend because of their busy work schedule. And then you saw it on a Saturday or Sunday. Usually due date for offers is either Tuesday or max Wednesday by noon. Okay, so you saw it on Sunday, and there's so much paperwork that we have to focus on, hundreds of pages that needs to be read, acknowledged, signed, and on top of it, Me as the buyer's agent, I have to strategize. I have to be in close communication with the seller side to understand what's the competitive landscape, how many offers they're expecting, how many offers did they receive. I call them the next day, how many now you have in hand? Do you have anything in hand? And they're not going to be very transparent because they can't share confidential information, but through by asking the right questions, we can get some hints where the other offers are at, and we can try to understand and we can try to strategize what we need to do. It takes hours. I mean, it takes sometimes 8 to 10 hours, maybe more, just putting together everything and the constant follow-ups, constant changes. We put a number first and then we change our mind. So you have to be so financially well versed, and you really need to know your maximum. You really need to know how much down payment you're putting. You really need to know which assets you're using. If you're not well prepared, then that offer moment, it's quite hectic. That's why it doesn't really lead us to a favorable spot. So,
Barsha, just to reiterate that,
Dominique,
what you don't want to do at that point is have to get in touch with your lender to see if you can go as high as you think you have to go.
It's true. Yes.
And that's not a conversation you want to have to start worrying. Wait a minute, I was pre-approved to 2 million because that's what I requested. This house, Bashak's telling me I'm gonna need to come up to at least 215, 2175. I don't know that I can do that. You don't want to be worried about that. Now you're reviewing these disclosures that Bashak talked about. You're reviewing the contract, and now you're trying to get a hold of your lender to see if you can increase your purchase price. So my advice to everyone getting pre-approved is to get pre-approved to your most maximum painful, uncomfortable amount. The amount that you would never pay unless it is a spectacular home and it's checked all the boxes and it's painful and you can't even believe you're going to be having a mortgage that high. That's the amount to get pre-approved for.
Yes.
Because it's easy to come down.
Yes, absolutely.
Easy to come down. And just because you get pre-approved for 2.5 doesn't mean that Bashak has to show you a bunch of homes at 2.5.
No, absolutely not.
Because remember, you have your comfort level. We understand that. There's a comfort level. That comfort level is 2.2.
And we discuss about it in advance. Yeah, we say that, okay, we understand your eligibility is this, but this is how much you're willing to spend for, and these are the homes that we're going to look at. Absolutely.
I can tell you, Bashak, how many times I get clients that I pre-approve them and I ask them to get what their max is, what they want. They tell me, okay, that's fine. And I'll tell them, you have wiggle room. We can go higher. Oh, no. I don't want to get pre-approved for more. Okay, all right. And then next thing you know it,
they step into an open house.
Well, they walk into open houses and they wonder, why was this open house not on my list? Oh, because it's $200,000 over than what I told Bashak I wanted my window for. So they have fallen in love. And now you need to go back and find your lender and try to see if you qualify. So always get pre-approved for the most painful amount that you cannot believe you even are considering. Maybe you're going to tell yourself, I would never do it, but you're going to get it in writing anyways, because you're going through the process. You may as well go ahead and just max it out. Again, you don't have to do anything with it. You do nothing with it.
Yeah.
But you don't want to have that in the back of your head. Yes. Qualify.
I totally agree.
In love with a home.
And I've seen situations like that. We were trying to reach our lender very last minute, trying to see if we can have them pre-approved a little bit more. But again, if it's a bank, they might be closed or they might be more rigid. And last minute, you want to change your lender because you want someone a little bit more flexible. So it's very hard to do these in that very last minute, because the moment you see the home, you have maybe 24, 48 hours or 72 hours max to put together your offer. It's that fast. Homes in Santa Clara County today, on average, especially in competitive markets where the school district is very desirable, like Los Gatos, Saratoga, Palo Alto, Los Altos, etc. All these school districts, homes get sold within a week. So by the time they're on the market, the buyers are already lined up. Actually, that reminds me a very important tip that I would like to share also with potential buyers. So I often get asked, how do I not miss the right home? Well, you need to have access to all the homes in the market. That's your buyer's agent job, obviously, to do that. But if you think that everything that's available is listed on Redfin and Zillow, it's not true. On average, roughly, let's say 15 to 20% of homes in competitive California markets, they sell off market or they sell without. Ooh, I'm hearing an echo now.
I hear you.
Oh, can you hear me now? Is that okay?
Went away. I hear you.
Can you hear me now? Can you hear me? Shall I log in again? One sec.
So
I don't
I
know
just
what's
put
happening.
I just put my Facebook on, but I can't hear you on my Instagram anymore. Can you?
Can you turn off your Zoom? Because I hear the echo.
It's on.
Okay, can you hear me now?
Yes, go ahead, Tom.
You can hear me, and is the echo gone? No? I don't know what to do. Echoing, everybody is saying echoing. I don't know, I didn't touch it. Okay, maybe I will. One sec. I can hear all of you, but I can see that it's still echoing. Okay, I'm gonna turn off and then come back on. Okay, just 1 second. Feel free to join again, guys. I'll add you, Monique. Sorry, Zoom people. Okay, I'm turning the volume.
What did you say, Bashak?
I'm just turning the volume on
I
Zoom.
can't hear you. What was that?
Can you hear me now?
Yes, go ahead.
Okay. Now what I'm doing is basically I'm going to be turning on Instagram again, but I don't know, for some reason it's stuck. But I'll continue the conversation here for a few seconds because it's saving the conversation from it's downloading now. I don't know. I'm connected, but all
Actually,
of a sudden it
everyone
stopped.
should mute their mics. Oh, yeah, my mic was muted on there, but I don't know about anybody else that was on the call. But
Oh, you think that's why?
well, I don't know. I have no idea. I don't know. I muted my mic on my computer and I muted the sound on my computer, so the only thing I could hear was coming out of my phone from my Instagram.
I see. Okay. Well, it's downloading now.
While
But
while you're waiting, does anybody else like on Facebook right here that we're talking to here? Do any of you, while Bashak is waiting for that, do any of you guys have any questions so far that we
see.
might have that you might have or that have come up based on the different things that we've talked about? Because we would like it to, we were going to do questions at the end, but yeah, it's just to
Meanwhile,
save the time here that we're going back. I don't know if anybody had any questions. Everybody has their mics muted. So if you want to ask a question, you absolutely feel free to do so.
okay. I am turning it on again. Monique, don't forget to join. I'm turning on off the volume here.
Yes, I'm watching.
Request
I'm
to
waiting.
join, okay?
Uh-huh.
Okay. Yay. All right, I guess we are back, people. Let me see. I just got Monique in. Hello again. I'm sorry that we got interrupted. Okay, our Zoom people are, oh my God, there's still an echo. Okay, can everyone turn off their mics? Is there anyone with a mic? Monique, turn off your Zoom.
So I just, now I can hear you on my Facebook, but I cannot hear you on Instagram.
You cannot hear me?
Mm-mm.
So weird. Everything was working perfectly. No?
Oh,
What happened?
I think it.
Basha, can you unmute everybody on the participants for Facebook because they want to ask questions?
Sorry, where?
Within our Zoom, they want to ask questions, but they're all muted.
I would like to ask everyone to type their questions. I think that would be easier.
Okay. Okay, so if you can type your questions, that would be easier.
And meanwhile, I'm trying to figure out what's happening here. I don't know. Okay, so here's what I'm gonna do. Instagram. Monique, do you want to tell everybody to jump back on Zoom if they can?
Okay, so I don't know if they're there, but if you guys are there, if you can jump on our Zoom link. Did you put the Zoom link into the chat?
Let me do it now.
Okay, well, she's going to put the Zoom into the chat so that you can finish. We have about another half hour or so, and obviously then we're going to be opening it up for questions during that time. So hopefully you can join us via Zoom.
Yeah, I don't know why it's not going through. I have no idea. It was going through, and then all of a sudden it might be a glitch or something on Instagram.
So I think we have more people coming on. So if you wouldn't mind clicking the Zoom link, because Bashak's
Yes, let me type
Bashak's
it.
microphone for some reason on Instagram stopped working. So we're gonna finish our presentation on
Okay.
our Zoom.
I'm writing it now. Here.
Let's see, would you please tell me if there is a lock-in period once we take a mortgage from a lender? Usually, after how many years one would refinance their home? Okay, is that okay if I read a question? Okay, so someone's asking if there's a lock-in period. So typically speaking, your rate is locked for 30 years, but you can refinance at any time. It's very rare for there to be a prepayment penalty not allowing you to refinance. The only prepayment penalties we typically see are with loans that are for investment properties, and you should know if you have a prepayment penalty. Otherwise, you can refinance at any time. Typically speaking, a lender will ask you to keep the loan for at least 6 months. The reason why is because we, as originators, the banks come back to us for our commissions. If we call it churning. That means that you do a loan, then you refinance in less than 6 months, you refinance again. Those lenders will be asked to pay their commissions back if the loan gets paid off in less than 6 months. So again, no prepayment penalty, but most will ask if you can hold on to it for 6 months. Bashak, you're frozen on Instagram.
I'm back because I was typing. Yeah. Can you hear me? Here? No, still.
On Zoom, let me turn my Zoom off. Hold on.
No, then it's going to create an echo. Weird. Okay, continue, Monique.
Yeah, it's not working.
Okay, I want to talk about, I'm gonna turn this off, okay?
Uh-huh.
Can you tell everyone to join on Zoom?
I did. I've said it a couple of
Okay.
times. We're gonna, yeah, okay.
Okay, here I am again. You can hear me while here on Zoom, right?
Yes.
Okay, perfect. Okay, I was talking about, if you guys remember, I was talking about the, what was it? I got so distracted. Oh, how not to miss the right home. That was our topic. And when it comes to that, I was saying that if you think by looking into Redfin and Zillow, you have access to everything. It's not the case. 15 to 20% homes they get sold off market. Then I get this question from the buyers. How come a seller doesn't want to advertise their home on Redfin or Zillow? Well, I mean, there are so many different situations. Every seller has a different story. They might be going through a divorce. They don't want to announce it publicly that their house is for sale, or they might have just had a baby and they want privacy. Or in Bay Area, we have a lot of very private individuals. They just don't want their photos all over the internet. And they just trust agents like us. Like I work for Christie's Sereno. We are a company we are a brokerage which is 20 years old. We are the largest independent brokerage in California. We have a huge network. They trust us and they say, hey, through your network, can you spread the word? I want to get my house sold, and we do the prep for them. And just within our network, we can find buyers for them. And this does happen very often. That's why, especially in a competitive environment, what you really want to do is you want to be working with a strong buyer's agent who has a good network and who will be able to show you off-market homes as well. Because the more options you have, better your chances of finding something quicker. So that's one thing I really wanted to highlight because these days people think, yeah, I have everything what I need with the internet. You know, I can have access to any information I want. Well, still, when it comes to real estate, it's a relationship business. So you need someone who is well connected. You need a brokerage which is well connected as well, so that you'll have more options. And there are a lot of clients that lately I had a family. They were looking something in Saratoga, which is a very competitive market, and I found them something off market through my agent relations. I found out there was a seller who was possibly thinking of selling, and then we started the conversations. The buyer and seller hit it off so well that, you know, at the end of the day, we ended up with a transaction. So that's really very important. One another thing for becoming competitive is I think Monique will have something to tell here because you have something quite unique, which we call NAF cash. I would like you to I would like you to touch upon that. It's quite interesting because
Yes. So, yeah.
we have a lot of cash buyers in Bay Area market. So in a multiple offer situation, if you want to be more competitive, if you have a cash offer, it's better. But of course, if you don't have the cash in hand, what can you do? What is this NAF cash program, Monique? And how can
So
it
if you
help?
don't, yeah. Can you hear me okay?
Yeah, I can hear you
Okay.
perfectly. Uh-huh.
If you don't have cash, we have a program called NAF Cash where you get pre-approved like you normally would for a normal loan, but we also have you approved for NAF Cash. Bashak is certified. Are you certified or are you getting certified this
Mm-hmm.
week? Or yeah,
Yes.
you are
Uh-huh.
certified. Okay. And so she can write up the offer on behalf of NAF Cash LLC.
Mm-hmm.
So we are buying the property for you, all cash.
Mm-hmm.
And then after we close, you buy it from us. This allows you to be competitive This allows you to write an offer and close in 10 days and really compete with an all cash, because now we're writing an offer that's all cash. Then you turn around and you buy it from us. And then there is a small fee. It's like 2.2% of the actual property. So if the house is worth 2 million, then you're looking at paying $2,040,000. So rather than paying much higher in your offer price, where to try to compete with all cash, you can actually write all cash and pay something maybe not as high as you normally would have gone had you had a loan where you had to compete with against an all cash offer. So we call it NAF cash. We can do this also if you own a house and you want to buy before you sell it. So we have NAF cash for that as well, so that instead of making your offer contingent upon the sale of your house, we can buy all cash for you. We also have other unique programs that will help bridge you from one house to another if you're a step-up buyer. If all of you are first-time home buyers, then the NAF cash is great, especially if you're putting, say, 10% down, and we can buy it. We can turn you into an all-cash buyer.
That's amazing.
Yeah, it's kind of crazy. So, but it's a great program. It allows us in the Bay Area to be very competitive. It puts you in a competitive situation where you normally would not have been. So what I'm recommending is for people to get pre-approved for a regular loan plus NAF cash, just in case if they had to do that.
That's fantastic. Do you also want to talk about, because I know we have a few homeowners also attending our session today, existing homeowners. And when you're interested in moving up or downsizing, or just change of lifestyle, you want to move to the next you want to move to your next home. It's a little bit challenging because how do we time it? Do I sell first, but I want to buy first? I don't want to go through that hassle. How can you also, if you can touch it, if you can cover that a little bit, how can you buy
Well,
before you sell?
so the question, Bashak, is what's the likelihood of a buyer making an offer that's contingent upon the sale of their home? What's the likelihood of them getting their offer accepted?
Zero,
Zero.
unfortunately. Yeah,
Zero.
it is zero.
Because they have 5 other offers and none of them are contingent.
Yes.
So they don't have to wait for you to sell your house. So what you want to do is you want to put yourself in a situation where you can make an offer and have it not be contingent upon the sale of your home. So we have like 3 different options. I can't get into all of them because that would take up the rest of the time, but I will tell you the high level. One is the NAF cash that we talked about. One is, which you might think, well, that's expensive. Okay, well, a cheaper option is to put 20% down. So if you have the 20% down, great. If you don't, we have a quick line of credit that we can get done in 5 to 7 days on your departing residence. So now that's your down payment. And we have a departing residence program where, as long as we have just a letter from you or an email saying you plan on selling your house, you're going to list it within 90 days after we close escrow on your purchase, then we don't have to qualify you, hitting you with the debt of the departing residence. So if you have a mortgage, call it 5,000, property taxes, homeowners insurance, and call that total $9,000. You're going to get a new mortgage for $14,000. It's really hard to qualify for the $14,000 plus the debt that you have from your departing residence. That's usually a very painful thing. You can't qualify. So people have to sell before they buy. But we have numerous programs where we don't account for the debt of the departing residents, even if it's for a line of credit. You just got that big $500,000, $700,000 line of credit. We won't hit you for that payment either. You only have to qualify for the new purchase, for the new loan, and is as if the debt of the departing residents doesn't exist. So this puts you in a very competitive situation without the cost of a bridge loan. And a bridge loan, you're getting a brand new loan that's going to pay off your current mortgage. Let's just say your house is worth 2 million and the bridge loan can go up to 60%. So that means that they're going to lend you, actually for easy numbers, let's go a million, they'll go to 60%. They'll lend you $600,000. And that $600,000 would need to cover the payoff of your current mortgage, which most of you guys will have 2.93%. So you really don't want to pay off that mortgage. You really want to keep it until you sell your home. And you're paying for a true bridge loan, you're paying almost 9% interest rate. For a true bridge loan, you're paying multiple points. So we have different options. We have the Nash cash, buy before you sell, our departing residence where we eliminate the debt of the departing residence, and a true bridge loan. And a true bridge loan works for someone who just doesn't qualify for that mortgage. And so the lender's going to charge you high interest rate, high amount of points, because it's going to be paid off the moment you sell your house. With respect to NAF cash, would you compete with the real cash time buyer or other buyers? Meaning, would you be able to raise your offer price with NAF cash? You're going to get pre-approved for a normal loan. So whatever you get pre-approved for would be what we would offer. So, it's not that you pay more. You just would pay what you normally would have paid, except it's all cash. Hopefully that answers your question. Okay, good.
Good.
So yeah, we have a few options for our clients that are buying up. You can even use our NAF cash. I mean, you can even use our departing residence loan if you want to keep your current house and turn it into a rental. And you don't have it rented yet, and you don't have a signed lease agreement. If you just have a letter saying you intend on renting it, we will again not count for any of that debt for the departing residence. So it's a really great way to do this, and the cost to that is really just a slightly higher interest rate by usually it's 1/4 to 3/8 in rate, but it's still going to be like a 0-point loan. You're still not going to pay, astronomical fees. It's a really great loan. People then will ask me when they do that. So let's say you've bought your new home, you're in your new house, and you had this huge mortgage. And now 3 months later, you've sold your home, you have an extra $1 million. Well, what do you do with that? You want to lower your current mortgage payment, right? So people think to themselves, well, I don't want to put that down on my principal because all that's going to do is lower the term. Because if you know this, when you have a mortgage, when you pay money towards your principal and you do a higher payment, you are cutting the term of your loan. You're not lowering your payment. So when you do this, you might ask yourself, well, I don't want to be stuck with that high payment. Okay, great. I put another $1 million down. Okay, great. I cut off my 30-year loan to 20 years, but I still have this huge mortgage. So that's when we would do a recast for your loan. And a recast means that you're taking that million, you're putting it down, you're paying a nominal fee, that may fee usually about $300, $350. And now we'll recast your principal balance based on your new balance. And we'll use the same term. So now your mortgage payment is now based on $1 million less, and you didn't have to refinance. All you had to do was request a recast. A lot of people don't even know that it's out there. So a lot of my clients that have the RSU income, they might have an extra 500 or extra, and they want to pay down their mortgage. Right. And the reason why they want to do it is because they want to lower their payments. They don't realize that you don't have to refinance. So you talk to your lender. If they're saying you have to refinance, that's because they want to do the refinance and they don't make any money on a recast. So if you want to know more about that, you can message me on my Instagram or or talk to Bashak. But a lot of people don't realize that they can recast their loan.
Yes, that's perfect. Great, great information. Very useful, Monique. One another thing. that we were talking today, I think it was recently announced, is there's this new program for first-time home buyers. Remember the Dream for All
Dream
program?
for all. Mm-hmm,
I think that's an amazing program. It's not for everyone, but if I believe if especially you're struggling with if you're a first-time home buyer, if you're struggling to put together your down payment, then this might be a great option for you. It has its limitations, but if it fits for you, then it's an amazing government-backed program. So I would like Monique to explain this because the application date is coming very soon. I believe 24th or 26th of February. Applications are going to start. Every year they tend to change the application process. I'll be honest, I'm not aware of how the situation is because one year I think everybody could apply. The next year they said we're gonna make a draw, right?
well, it's a lottery.
It's a
So, and
lottery.
it's a still a
Still a
lottery.
lottery. Okay,
It's a
still a
still lottery.
lottery.
So for anyone who's interested in the Dream for All, it's a shared equity program. It's up to $150,000, and up to a 20% down payment. Okay, so you get pre-approved now. You should get pre-approved immediately. We provide a letter to you, and then that letter, you have to take that, and on the 26th, you're going to register for the Dream for All. One of the borrowers needs to be a first generational home buyer. That means that your parents can't own a home in the US. So,
US or California? Is it
what was
for
that?
is it US or for California? You can't own a
It's,
home.
oh, US.
US, okay. It's
Yeah. Oh, I'm
nationwide.
sorry. It's the US for the owning of the home. Correct. It's
Okay.
not in
Okay.
California.
Okay.
Correct.
Uh-huh.
Um, and so you can be a permanent resident alien. You don't have to be a US citizen. And I
Mm-hmm.
believe you can also be an H-1 visa holder. Um, but
I
you just
think
can't, yeah,
so. For at least last
it
year
follows
it
Fannie
was the
Freddie
case. Mhm.
guidelines for that. So, but the main thing is that one of the borrowers has to be first generational. And when I say it's shared equity, uh, that would mean like if you bought a $750,000 house and they give you 150,000 as a down payment, and that 750,000, that $750 home, let's just say that goes up 20% when you sell the house, right? So 750 times 120%. So now that house goes up to 900,000, right? So you sell it for 900 and then you have to pay them back the 150. It goes back to them plus the difference between 900 and 750, that is 150,000. So that 150,000, you're now sharing that equity, right? So if they put 20% down and you made 150,000, you're going to be sharing, they're going to take 20% of that 150,000, right? Hopefully that makes sense. So it's a shared equity. If you end up putting if you end up putting 20% down, and
Mhm.
then let's just say fast forward, your equity increases by 20%, whatever you ended up selling your home for, you share that equity based on the percentage of the down payment. If that down payment ended up being 10%, then you would share 10% of the equity.
Mhm.
Okay.
What's the
So
maximum purchase price within this
it's
program?
really going to depend because you can also put your own down payment.
But I thought there was a limitation of a purchase price here. What's the price of the house? I think last year
They're
was 1 point.
right. So the maximum is this 95. And you know what, Bashak? I
Mm,
need to double check that for you.
okay, okay. I remember from last year, it was
Last year there was.
1.3, 1 million, something, 1.3 million. But again,
It's
this year,
less because the loan amounts are
yes.
the down payment assistant is less. And
Mm,
so, but I just can't remember right now off the top of my head what the maximum combined loan to value is. So I'm going to need to get back
okay,
to you on that. Okay.
sure. Okay, and also when it comes to credit score, what's the minimum requirement, as well as what's the maximum? I believe there's a cap on income as well. Who can apply for this program,
Yeah, it's just
right?
about 300,000. It's just
Okay.
smidge over $300,000
Okay.
is the maximum household income. Uh, and so generally speaking, that would mean that sometimes we have to be a little more creative with how we look at the income.
Mm-hmm.
So sometimes I just use a base salary of a client and I don't use their overtime, or I don't use their RSU. I
Bonus,
just use their
etc.
base,
Mm-hmm.
right?
Yes.
Because
Uh-huh.
if I combined all the income they actually made, then that might be too much, right?
Mm-hmm. Mm-hmm.
And so we are looking at a credit score of 680. And
Quite
you
flexible.
had
Yeah.
one other
Very
question.
flexible. Mm-hmm. Is there a question there? By the way, do you want to try logging on Instagram, or let me see if, yeah, if you want to try one last time so we can get questions there. If not, we'll just
Did you have it open still?
I have it open still. Try to log in.
Okay, I'm in, but I came out, so you'd have to invite me back in.
Oh no, I'm live, so you have to request to join and then I'll accept you.
Okay.
Yes, I can see that you joined. Now you need to request to join as a collaborator. Remember? No,
Mm-hmm. I
request,
did.
and let's see. I'm gonna turn off the volume here. Hello, Monique.
Hi.
Can you hear me?
Mm-hmm. I can hear you on the Facebook. I mean, on the Zoom. I keep calling it that.
But you can't hear me here, huh?
Can you talk again?
Can you hear me here?
Yeah.
So weird. Okay. Out. I'm so sorry. Do you want to just close yours and I'll just get the questions when I have here?
Yeah.
Yeah, just close yours. Okay. Yeah, sorry, Instagram people. We're having a problem for some reason. Monique can't hear me when she gets connected. I know you can hear me, but if you have any questions, feel free to type. And one another thing I wanted to talk about today, before we start getting questions, we have been already answering some of the questions, but before we wrap up, one thing that I often get asked is, how do I make sure I don't buy a house with problems? No one wants to regret. This is your biggest investment in life, and you really want to make sure that you've made the right choice. Um, and I totally get it. It is very important to make sure that you really understand everything and all the material facts about the house. And this can be very overwhelming, especially in such a short offer period. This is not an easy task. That's why you need a buyer's agent next to you as your advocate. It needs teamwork. So, what happens is when you like a home, you want to put an offer in, and the very first thing your agent is going to do for you is she's going to pull all the disclosures, which also includes inspection reports for you. In Bay Area is very different than other parts of states. Bay Area is very different even from the other parts of California as well. We have a very sophisticated process because the market is extremely fast here and extremely dynamic. The way it goes is that the seller prepares everything in advance. The disclosures, not just disclosures, sorry, inspections are done before putting the house on the market, and the inspection reports are part of the disclosures presented to the potential buyers. And the reason why it's done this way, it's because the market is going to move so fast that they want to make sure that there are no contingent offers, meaning they don't want a buyer to present an offer with a contingency saying, oh, my offer is valid only after I do the, I don't know, roof inspection, or my offer is going to be valid only if there are no problems with the property. They want to make sure that the offers are very clean, and transparency is key in Bay Area. That's why you're going to receive a bunch of inspection reports. You're going to receive title reports. You're going to receive information about the easements, the boundaries of the house, the natural hazard report, which shows if the house is in a flood zone or fire zone, etc. And these days, don't forget, in California, one of the biggest issues that we have is the fire insurance. As you might have heard lately, a lot of the insurance companies for fire, they pulled out of California because of all the wildfires we had. So if the house is in a wildfire area, it's extremely difficult to find an insurance company who's going to cover you. And if you find it, probably it's going to be quite costly. So you want to do your homework in advance, because you don't want to end up buying a house and then find out that fire insurance is worth a year's rent, or even more than that. So that's why you need someone objective. You need someone to be your advocate and sit down and go through all those reports with you. Well, when I'm representing a buyer, obviously I'm not a roof expert, or I am not a foundation expert neither, but we can understand when there are red flags when we go through an inspection report. And we will be highlighting these to our buyers. Again, it's totally buyer's responsibility to read these reports, but at the same time, when you have questions, which you will have, it's your agents, it's my responsibility to make sure that I can direct you to the right people, to the right, let's say if it's about foundation problem. And don't forget, in Bay Area, homes are quite old. So these are very, very common problems like termites, or I don't know, some insulation problems, or I don't know, some cracks here and there. These are very, very normal within Bay Area. For that reason, when you go through these reports, you want to make sure that your agent puts you in touch with the right people. If there is anything you can't understand, you do your due diligence and make sure that you're okay with everything you see. You're okay with any additional costs, any additional repairs that might be coming with the house when you're putting your offer in. So once again, it's extremely important to have someone independent next to you, trying to make sure that you have access to all the information and everything gets interpreted with an independent eye. And with this way, you will not regret the house that you bought, and you will have access to all the information that you need, and you're not going to have any regrets. So that's number one thing that I always recommend my buyers, is to be extremely thorough and to be extremely diligent going through all those reports. And this is also exactly the reason why it's very important to have access to homes as early as you can, because you're going to be going through all this information if you're interested in the house. If you've seen the house over the weekend, you'll have only 1 or 2 days to read and digest all that information. And if there is any problem, you'll have only 1 or 2 days to find the right expert and ask your questions. Is it something serious? How much it's going to cost me? So that's exactly the reason why. work with a good agent, and make sure that you get all your questions answered before you put in your offer. So we have last 5 minutes, and then if there are any other questions here on Instagram or on Zoom, we will be more than happy to answer them. I think there were a few questions here. I think you answered the question about Monique about NAV cash. We already covered that. Is there anything else anybody wants to ask? And we will be more than happy to. We have a few more minutes. I think we've covered a lot of the essentials here. So if anybody has any other questions or any other comments, if this was a useful session, or what would you like to see in the future? Did you enjoy it? Would you want it to be in a different way? We love constructive feedback, and we will be more than happy to hear your thoughts, or just a thumbs up would be great as well. Thank you. Sachin says, very informative session. Thank you. Thank you for joining, Sachin, as well. We really appreciate your time and your enthusiasm and all your questions. Monique, is there anything else from your side that you want to add? Anything we might not have covered?
Geez, we went through a lot of information. So, I hopefully, everyone learn. I can't think of anything else. I mean, I really can't. I think the only thing is that just when you get pre-approved, it's an intrusive process, and I know one other last thing, pre-approvals are generally good up to 90 days. People ask me that,
Yes.
and so how long is it good for? And so, yeah, but it's usually 90 days. And that would be the only thing, I think, question that you and I really didn't discuss. If you want me to send you an analysis of our, the cost of waiting analysis for either a refinance or a purchase, you can message me for that, and I actually have a full analysis that I could send you. And that could be helpful for any of you.
Sounds good. Well, I'm checking if you have any questions here. I can see a few thank yous and thumbs ups. Thank you so much for joining, guys. It was pleasure spending this evening together with you. We hope it was useful, and we're planning to have more sessions, hopefully, in the future. Please let us know if you have more feedback. Thank you for your time. And if you still have any other questions in mind, feel free to just drop us a message, and we'll be more than happy to answer them for you.
Thanks, everyone.
Thank you, everyone, for joining. Thank you, Monique, for your time. I really appreciate.
My pleasure. My pleasure.
Thank you, and take care. And sorry for the little hiccup with the Instagram, but we still managed it. It somehow.
Yeah, we did. What's funny, Bashak, is I saw someone on Instagram saying that they could hear both of us.
Oh, it was between you and me? I don't know. I have no idea. I don't know. Esra is saying thank you. Thank you, Esra, for joining as
Maximum
well.
LTV high balance 95. I think it's 95%.
What's that?
150. I was looking up the guidelines for
the Dream for All
for
program.
the Dream for All. Yeah, 95%. Yeah, I think it's gonna be, hold on, it'd be 150 divided by 5%. No, that's wrong. I need to double check.
Okay.
I need to check. I'll let you know for sure.
Okay, we still have time. I think the applications start 26 February or something. People will have time.
Thank you.
Sounds good. Thank you, everyone.
Thank you,
Monique.
Esra.
It was so
Appreciate
nice
it. Thanks,
having you.
Shasheen. Lita, appreciate it. Thanks for staying on the whole time.
Thank
Really
you,
appreciate it.
guys. Okay,
Bye.
take care. Bye-bye.
The recording